Whether it's S&P futures, SPY puts and calls, or the SPX, which I have here on the chart, I'm going to show you today Friday's action. This is about 15 minutes from the close. And how do you look at any variation of the S&P? We'll take a look at the SPX in this video with automated entry zones. And trading SPX is a little different than I trade SPY or trade S&P futures, both of which I do in the Sector Secrets Mastery. But a lot of folks want to know, Rog, can we use your tools, specifically the hourly and daily price movement ranges, these automated zones that you've got? Can we do that for the SPX? And the answer is, of course. Everything has typical volatility zones where we focus on what happens 2/3 of the time. And by the way, that's going to be the vast majority of what we deal with. So while there will be fantastic days like Thursday where the market just trends higher and exceeds the typical volatility for monster wins, which we had in the Sector Secrets Mastery, there are more ho-hum days like today where we're trading in normal ranges. So let's take a look at what we would do with something like this. So this is the 5-minute chart here on the left, and this is the hourly chart. Now you can look at the daily as well, and what we're looking at specifically are the hourly price movement ranges on the 5-minute. So this is a volatility tool for hourly or intraday charts of more of a short-term nature. And then we have the daily price movement ranges here on the hourly. You could put this on the daily as well. And this is for the bigger picture session zones. So here's how it works. Now, I will say this is less than ideal, but that's oftentimes going to be the situation with any trading day. Unlike yesterday where we opened above the previous session close, today we opened a little bit below, but nonetheless, the zones still do work, and this is how it works. When the market opens, you're going to see that at 9:30, again around 10:30, we sunk into these green zones. These are support zones, and these are automatically plotted on your chart. Green is support, red is resistance, and that's really all you need to know. The calculation behind it is historical volatility. What is the tendency for any symbol, whether it be Apple, whether it be crude oil, whether it be gold or SPX, what is the tendency for the symbol's movement hour to hour and session to session? So when we sink down into the green, like we did back in here around 53.10 to about 53.05 and did again between 53.15, right, and 53.10, these were tests of the hourly price movement range, the HPMR green support zone. And the idea is simply to take that to the other end of the range. That's it, right? So you go from support to resistance. And you can see it again, go from support up to resistance. Now, a lot of folks want to know, okay, Rog, but SPX is really expensive. They're big dollar options. How do I make this affordable? Right? What's another way to look at this? So let's come on over here to the right side and look at the 1-hour chart. The 1-hour chart shows the session ranges right in here, all right? Support and resistance. And ultimately what we want to do is remember that there is a typical range for the entire session. This would be Friday's range. And the idea is, Rog, what strike, and it would be out of the money to make this affordable, would have a chance of being in the money, at the money, or very close, but still out of the money. Because we know out of the money options, especially when bought earlier in the day, can have a really good return if we're in a reachable zone. So take a look at what we've got here. So here are your entry zones, 53.05, 53.10, 53.15. Jump on over here to say, okay, if I was looking at an out of the money strike that has a chance of being reached based on the probability of today that starts at 53.50 and basically ends right around 53.70, right? So then you go take a look at your out of the money strikes when prices are down at 53.05, 53.10, 53.15, even this test here around 53.13, right? When we get down to that level, you look at the price of those out of the monies. If you want to be a little closer, 53.50, but that will cost more. And if you want to be closer to realistic out of the money, that's going to be up around 53.70. What's really important is that these trades get put in early. So this entry would be far more ideal than this entry. All three worked because all three sunk down into the zone. And then take a peek. We got into the zone, right? So those 53.50s, bingo, right? And at that point where we're trading in this gold zone, even the 53.70s earlier in the session. Now remember, this hit by about 1:30. The way in which, if you are looking long calls and long puts, which is what I recommend. I do not trade spreads. I don't sell premium. This can absolutely work with directional long calls and long puts. That's what I specialize in. And if you take a look at that, if you can get those in early, look how early it is to figure out what your entry zones are and what your out of the money strike would be. So this is the framework. It's a repeatable framework. It's an automated framework, and it gives you precise levels right at the beginning of the day. And then if you're looking for those continual entries, you'll see they're there. In this case, 3 different entries throughout the day. And you might say, Rog, if we're looking at something, what would your cutoff be? I'll tell you, I like to be done. You might say, Rog, you mentioned early in the day. Here's a big hint. I like to be done with these fills by 10:55 a.m. Eastern. And the reason is, by getting in the zones down in here, even a pullback like this would have been something we could have tolerated, right, without being in a negative P&L position to set ourselves up for a bounce. And this is a pretty choppy day, so I don't want to choose a well-chosen example here. I'm going to choose a pretty difficult day. Choppy, not a day like Thursday. It's more a realistic day like we had today, Friday, and yet these volatility zones continue to operate at a high level. Hope that helps, giving you something to use, tools you probably already know and love if you're familiar with my toolkit, and how you can apply it to the SPX.